Right, back to Coal of Africa. This video is being filmed on the 28th of February, but this chart is actually the 25th of February. I showed this chart to a lot of traders that I've spoke to about Coal of Africa. I drew this channel in. No one agreed with me that this was a viable channel, so I even circled the contact points to say this is why. That's actually the high of the day. It's not where it closed. This is why I think that this is a viable channel. No one seemed to really take much notice. They was telling me, no, 18p will hold, and they was telling me how wrong I was. I had a projection of around 15 or 16 pence. I'll show you the next day or two what happened, just so you can sort of see what happened with that channel. It actually had a little down day, and then it had an attempt at that resistance again. Now I've actually made a point of writing respected resistance. There was a flat channel, which is very significant. I do tutorials on this. If you want to know what this is, come to the members section. I had of our website. I had around a 14 pence target. I put a question mark because it is a little bit of speculation. But at 18 pence, I was telling people it's going down and it's probably going to go down to 14 pence. This is today. This is what happened on the 28th. Actually, I'll show you on this first. You can see this is where I was saying, look, it's at resistance. It's a long way down, people. No one was listening to me. And look what happened. We had a gap down. The low was sub 16 pence. We actually just touched below 16 pence today. Yeah, so I mean, this is it's getting on to my target. Let's go back and let's actually. This is something I noticed this evening. Gaps. I love to know and recognise and be able to trade gaps. That the price came up. It came up and then it had a gap. We'll actually zoom in because I've done a lot of drawing on this. The top of this close to the bottom of this open, there is a discrepancy between the two. So that is what we call a gap. This gap has got a certain characteristic, and this one, if it shares the same, then we should see 11 pence. Now I'm calling for that, and it's around 16.4 pence, as you can see there. I mean, if this hits 11 pence, then that just shows you how good technical analysis is. Right, get a piece of string. This is where the move started. Get a piece of string, put the end of the string here, pull it up, and mark with your thumb on the string this point here, which was the start of the gap. Then put the end of the string at the top of the gap. So put it at the top of the gap, which is just here. Pull it up your screen, and it will give you a projection which was just pretty much a fraction away, if anything, of the high of that move. So that is simple technique, and you pretty much caught the top of the spikes of them candles. Now that gap had a certain characteristic, and I do tutorials on that. But if this is the same thing, the top of this move is just here where I've marked the black bar. Now again, if we mark with string, put the end of the string here, pull it down your screen and mark on that black line, which is pretty much where the gap started. Now if you do exactly the same, put the end of the string here where the gap starts or finishes, pull it down, and it will give you a projection, and that's knacker above 11 pence per share. If that happens, we're going to get a double bottom, and a double bottom will be enough to actually reverse this downtrend. Thing worth noting is there is quite a few solid supports in its way. 14 pence is actually my buy target. Should we get 14 pence next week, that is where I'm going to buy, because it has quite a strong horizontal support. But if that breaks, you can rest assured there's pretty much hardly anything stopping it hitting 11 pence. So I'll be a buyer at 14. I may sell a little rally. We don't really know yet. but we will certainly be selling if it goes sub 14 pence, and we're expecting 11. A different perspective. Let's look at the long-term view. I mean, this was about 3 years ago. We're talking March 2010. It was around this price. It's pretty much traded within this sort of, like, it looks like an ice cream cone, doesn't it? Once that breaks, you're going to go on one hell of a rally. But at the moment, we've had two goes of sort of getting at this resistance line, got slightly above it. You've seen this chart before, but the significant thing is that support line. Let's just make this a better setting so you can see more clearly. If you look where this support line is, it sort of marries up with what we are expecting as a short-term buy target, which is around sort of 14 to 15 pence. It depends how long it actually takes to get there, because what would be really clever is if we actually test the support right at the stage where we get that horizontal support as well. So we're actually testing two support lines. If we touch the black support line before we get to the horizontal 14 pence, then we will need to buy, because that might be all you get. There's a lot of traders watching this, and there will be a lot of money going in at the right point. We do not want to be missing that, but we don't want to be premature either. But yeah, I mean, that's pretty much our, until the market shows us otherwise, that is pretty much, with everything I've shown you on the video, that's what we're expecting. It's traded within the ice cream cone shape. It looks like it hasn't got much longer. A double bottom would be enough to absolutely break this downtrend that we've been in for about 3 years. We're probably going a good bull run, but I'm not saying we're going to get 11 pence. It is a possibility. But to all the traders that gave me loads of lip at 18 pence in my ear roll, saying, oh, you ain't going to get anything below 18, you're mad, you're biased and everything like this. Well, we're here, and we're here at 16 pence a share. I'm not going to say I told you so. I'm not going to say I was right, you was wrong, because that would be really pathetically immature. But what I will say is, fuck you. But anyway, that's your update with Coal of Africa. WeMakeMints.com, the only ones that have been calling this right at the moment. So yeah, stay tuned. And actually, I've got something else to show you before you go. Just want to show you two screenshots that I've just taken and put some bits on to stand out. A lot of traders out there will actually say, oh yeah, I bought this when it was 5 pence and now it's £2 a share. Well, we don't want to be like that, so let's actually prove that we made these transactions. Let's prove that we sold, this is half of our holding, we sold at 20.1 pence on the 7th of February. It was actually the second transaction. We dumped the remainder. We got a better price, as you can see. Sell, Coal of Africa, blah de blah, this amount of shares, etc. at 20.65 pence a share. So we sold at over 20 pence. The price, as you see today, went just under 16. So that's 20% we've made on this trade if we bought at 16 pence per share. Which is quite a bit of money. But anyway, just wanted to show you that.